I have that 200. I'm very open with this. I have 250 shares in Tesla. You can see it's already like almost 2 million ringgit. But if I don't sell, it's not my money.
What is up, guys? Welcome to this Coffee Talk series. In this series, I aim to interview people from all walks of life, be it bloggers, millionaires, seasoned investors, YouTubers, and all of that good stuff. In this video, I managed to spoke to a seasoned investor with almost 13 years of investing experience. So trust me, you will want to stay until the end of this video because you will be walking away with so much value. Now, I know this video will be so much longer than the usual ones, but fret not, if you are too lazy to go through the entire video, I will link it down in the timestamps in the descriptions down below. So I will also include a summary of this entire video, so if you don't have the time to go through it, then feel free to jump to the timestamps down below. So without further ado, let's jump right into this conversation.
Okay. Hey Kelvin, welcome to this series. This is a Coffee Talk series where we will be chatting with experienced people, maybe YouTubers or bloggers, and to hear up their investing thoughts. So first of all, thank you very much for accepting this invitation. We previously talked on Lawyat Forum, and ever since that, I think we began chatting. And to my surprise, Kelvin actually accepted my invitation to come on this video call. So thank you very much. So without further ado, let's begin with the start of the show. Kelvin, why not begin introducing yourself?
Okay, hi. I'm Kelvin. I'm not a YouTuber. I'm not a famous blogger. I'm just a normal person. So I think I reached out to Waziet because I was intrigued that he shares a bit of the investment mindset that I agree with. So I was just out of the blue, just asked him to say if he needs any help to bring out this kind of value investing or whatever strategy that can help beginners. So that's how we started. So I hope that his YouTube channel will grow. Maybe from me we start off, and then he can get more exposure with others as his channel gets more informative. So from my side, well, I started in 2009, which was, as everyone knows, that was the crash, the subprime mortgage crisis in the US. I was at that time in Germany, fresh out of university. I was fortunate to get a well-paid job there as an engineer. When I started investing, it was I would say I was really green. I have no idea what I'm putting myself into. And I basically put my first paycheck into investments. So maybe we will talk a bit about that later. And that was that. And then it was a bumpy ride, some surprises, many lessons learned, burnt my fingers, met different people, learned a lot from investing.
Spot on. I agree with you. Me myself, I also, funny enough, I'm also a mechanical engineering graduate. So I had literally zero financing or any investing knowledge. So everything I've learned of is either from YouTube, from online websites, and speaking to experienced people. And I have only recently began speaking to people that have invested for quite a bit of time. And I think that's really eye-opening. And what you can watch from YouTube, what you can read on website, it's only what you know. But the world is actually so big. There's so many parameters around that you wouldn't even know that it existed. And you mentioned about you burned your hand, you scalded yourself. Me, myself as well. Although I did not trade, we share the same value of long-term value investing.
Yeah.
But throughout my ride of, I think I started right before the trade war erupted, and right before the the trade war erupted, and before COVID. So things are pretty nasty right now. Yeah, if you agree with me, things really look really suck much this year when COVID.
It's unprecedented. I mean, it's unprecedented.
Yeah.
The previous crises were all man-made, but you see the pandemic. It's it's totally different. I mean, it's not man-made, and you can see basically economies shut down. So we still don't know what's going to happen.
Okay. So without further ado, let's start with. I'm more interested to hear from you, and also for the audience as well. What kinds of metrics do you look at when you begin when you pick your own stocks, when you pick your investing decisions?
Okay, my strategy actually changed through time. So I will start at when I really started investments. When I was out of university, it's actually a pretty long story. I started in early 2009. I started my job at 2008, at the end of 2008. So when in 2009, exactly on January, I went to the bank and I told the bank advisor saying, okay, I have this amount of money and I want to invest. So at that time, all I knew from my previous years was in Malaysia, we have, trust funds, we have FD, we have ASM, yeah, all the mutual funds. And when I was talking to him, I was saying, okay, I have no idea. So should I put in a savings account or in a FD? So at that time, the interest rates was very low. In Europe, it was, I think, like 0.5% when I started at that time. Okay, I might be wrong, but it was really low. And he actually asked me, what about in Malaysia? I said it was like 4 or 5 at the time, 4 or 5% in Malaysia. And then he was like, well, you should put your money in Malaysia then if you want to put in FD. And then I was like taken aback. And then I said, okay, what about other strategies? What kind of things we can do? And he opened a brokerage account for me. And at that time, I didn't know what to expect. So he said, okay, I can get your money into some funds. It wasn't a big amount of money. It was, I think, in the region of 10,000 euros, if I'm not mistaken, at the time.
That's still a lot for me.
yeah, but I was actually a saver because I was very, very frugal.
That's nice.
Student life. I worked during my student life as well. And then he put into a rather aggressive German fund, and he put some in bonds as well. So at that time, I was saying, okay, I think that suits me. I mean, I trusted him. After 3 months, the performance was okay, and then I started reading. After I opened the account, I started reading, and then I found that he opened a managed account for me. Actually, I didn't want something like that. So what was I was pretty angry at the time was the account had a management fee, but he did not disclose that at the time. So I thought it was just a brokerage account because I have no idea really. So I mean my advice now to beginners is to ask more than ask lah, just ask. Yeah. Right. At the time also maybe language is a bit of a issue lah because they was totally German. But I know German. It's just that I did not come to my mind at the time to ask these kind of details. So at that time I decided. After 3 months, I decided because the fee was every quarterly they will give me a bill to pay. So it was quite a substantial amount at that time. It was about a few tens of euros. And then I just went back to the advisor and said, just close it down. I want to open a non-managed one. So he said, okay. You can go to our subsidiary. They have like a discount brokerage, but he said you are going to lose my advisor because it's a discount brokerage. There's no relationship manager. So I said it's okay. And then at the end it turned out pretty well because after all he's only, and I found out later also, he's only recommending the funds that the banks were selling. So actually maybe he even got a commission out of it. So it's also another. Yeah, it's also another, what I can say, another red flag for beginners to make sure you get the correct advice from the correct people, where the interest lies. And then after that, it was rough ride. Not really rough at the first time. went through pretty much value investing phase first. I was looking at trends. So I started what my investment strategy from then until now that did not change at all is that I look at trends. So I analyze consumer trends, I analyze economic trends. So basically, for example, let's say one very big example is that the automotive trend. In 2000, in the early 2000, I actually came across a report by KPMG saying that consumers will stop buying cars. Millennials will not buy cars anymore. They are going to take mobility as a service. So the concept of buying cars is outdated. It's not like, I mean, I'm already nearly 40, and at that time, car is a symbol of freedom. But nowadays, if you ask any teenager on the street, they don't, cars is nothing. I mean, they just want to take a Grab and go somewhere, that's all.
Right.
So at that time, even in 2000 already, there was this trend. And then also the electro mobility trend. So I was also looking into that early 2000, 2005, 2009, early 2010s. And then I look at trends first. Then I look in when I identify a trend that I think will come in the next 5 to 10 years. I look into the companies which offer these kind of trends, which will really disrupt and take over the industry. So an example is of course Tesla. If you know from the forum, I bought Tesla.
Yeah.
And at that
I also
time,
saw that you opened a Tesla trend.
yeah. At the time was it was 2011, 2012.
Oh wow.
That time, Tesla was just releasing the Model S, and I was in Germany at the time, and something that really made me invest in Tesla or made me realize that Tesla was one of the my biggest conviction buy is that I was driving on the autobahn, and then I did not hear anything, and then there's a car that just zoomed past me, and I was driving already like 200 kilometers per hour. It's legal there, so no police will summon them as long as you are on the autobahn at certain stretches. So I was like saying, wow, this car, what car is this? I mean, it looks like a 3 Series, but it's like silent. So I went deeper, and then because of the trend that I see, the renewable energy trend, and I see the products that this company can come up. So I put 2 and 2 together. So I researched further. I did not buy at that time. I only bought it in 2018. Actually, I already did a lot of research. I actually go through a lot of things. I go through the financials. At that time, it was not proven yet. I mean, You can see they were bleeding money. There was no fundamentals at all. It was just Elon Musk and a big bucket of hope. That's all. And then the rest is history, as you can say. I mean, that's how I go through. And basically for other stocks, it's all the same. I look at trends. One of my biggest buys also was Microsoft and Apple. And it was also based on trends. I mean, handphone, 2007 when the iPhone came out, everyone was saying that Nokia will be big. I was personally in Nokia. So I was also very lucky. I was an intern in Nokia, and I worked for Nokia until 2012. And I can see how disruptive a tech company can become, and how bad a legacy company can become, how bad a big company which had a 50% market share at the time can really go to zero or near zero nowadays.
When you get complacent.
Yes, they are very complacent. The management, they were bickering among others. I mean, internal conflict is crazy. When I was there, we had engineers like rallying in groups saying, we should go with this, we should go with that, and then there was no clear direction from the management. It's pretty much public nowadays. I mean, if you look into any Nokia case study, I'm pretty sure you can read the same thing. And I was in there, and that's why I went to look at Apple. I bought them, I think, in 2010, something like that.
That's really early.
And yeah.
You still hold them?
And yes, I still hold them. I sold some to get into Tesla. I sold some middle last year, something like that. I should have held some, but I need.
Has it ever come across your thought to maybe just offload a little bit, take a bit of profit.
Yes,
Because
yes,
a lot of
I
people does
sold.
that.
You mean for Tesla?
Uh, for Tesla, yeah. For Tesla,
For
I know.
Tesla, no. For Tesla, no. The Tesla has been really, for me, I have a 99% confidence that it will reach the targets that I'm looking for. I am looking for a trillion market cap.
Mm,
If you look through my trade as well, in early 2019 or something like that, when I opened the trade, I already said that it will be a $1 trillion company.
but it's about
The
300
trends are
right
okay.
now.
It's now 300, yeah. Recently 350 or something like that, yeah.
Yeah.
So it says at that time it was about 20 times from what I bought. So everyone was saying I was crazy. There's no such thing. I mean, it will be larger than Ford, Toyota, and look where they are now.
Yeah.
So yeah, sometimes it's trends. I mean, fundamentals is important, definitely is important, but fundamentals, I don't think it works for disruptive companies or growth
True.
companies. It has a small factor in it, but the market is forward looking. I mean, fundamentals are all backward looking.
Correct,
So
correct. They're all lagging
yeah,
indicators.
they're all lagging. So I have fundamental stocks as well. I used to hold the Shell for
Sure.
their dividends. I used to hold what else is McDonald's
Mm-hmm.
as well. So I mean, I have different kinds of strategies. And then I also hold Microsoft. Microsoft is the only one that I did not sell at all.
Mm.
And that was like a 900% gain now.
Right. Awesome.
So yeah, but it was, yeah, but 10 years. I mean, of course, at that time it was very small investment. It's not as big as what I've done with Tesla nowadays.
Mm.
So
But,
I mean, small stuff
mhm.
grows large over time. That's why I
But
have to tell to beginners as well. I mean, don't look in the short term and look really long. 10-year horizon is normal. 10 years is normal.
10 years normal.
Yeah.
Like funny you mentioned about Tesla. It's always deemed overvalued even from the very beginning. Even Apple, people always had doubt of it. Um, whether is it 2011, 2014, 2016.
Yeah.
At any point, people will just think, yeah, you are crazy to even invest in companies with that kind of PE. No, even though they are
Yes.
growing, like the EPS is growing, but what happens if there's a recession? They are going to get corrected as well. And then same happens with Tesla today. It's about 700 or 800% increase in the short frame of 2 years. I think I have no idea
Yes.
about the exact numbers, but it's about there, lah.
Roughly, yeah.
Then after the Falcon 9, the Dragon Crew one, I think after that they just took off so fast. And yeah, so they are about 900 PE right now, if I'm not mistaken.
Yes.
Or
Yes.
about there.
And
lah.
that's also one thing I have to tell you. I think your previous video was talking about qualitative
Right.
analysis, right? Qualitative factors. That is one thing about these kind of companies as well. I mean, you have to put a brand value to it. For a stock to have you have a product but nobody knows about it, the stock will not go up. So you see like Tesla, although you can, if you look from a very narrow perspective, the success of Crew Dragon has nothing to do with Tesla fundamentally. There's nothing. They don't earn a cent from that. But because of the media coverage, because of the CEO, so you can see that it helps. So that is also how a visionary CEO or maybe a key figure in the company can put value to a company as well. Like what Steve Jobs has done, what Jeff Bezos has done, Mark Zuckerberg, all these kind of stocks. So I mean, there's no one strategy that can work, I can say to the beginners as well. I mean, you have to make your own decisions. You have to have a certain amount of courage to go in, and of course, don't be afraid to burn your hands a bit, because you can learn a lot. You really learn a lot.
Right. I always tell people, even if they just got like in the red region, like we call it, like the red region, and when you're in the deep, especially during COVID, if you trust in the fundamentals of the company, if you have hope, have faith in the company, just hold on to it and don't sell it, because if you sell it, you are just realizing the losses, right? But of course,
Yes.
it's true also, if you hold it too long and the fundamentals of the company cripples and you just
Yes.
holding it until zero lah. But I mean, it's fair also from what they believe in. Like, for example, I'm a bit skeptical about AirAsia as well, if you have heard about them already.
Yes.
They have crippled pretty much 60 or 70% of their value over the course of this entire COVID lah. And who knows, maybe at the end of 2021, they can't even stand again. So there's that lah. So it's a, how do you say, it's a really big emotional hurdle for people to cross that buy and lastly the sell, the hurdle. That's the largest emotional barrier, the psychological barrier that any beginner has to cross.
I agree. I think what the beginner lacks maybe when the thing is that they did not make a decision when they buy, they did not make the decision that they did not make an analysis or a study what happens if something happens. So for example, let's say AirAsia, when you buy it, everyone is thinking, okay, the tourism industry, everyone is going to fly with AirAsia. It's going to take over. It's going to take over the region. But when you see like a pandemic happens, when the demand totally goes down, it's normal to have airline industries go down. So at that time, the investor has to ask themselves, when they buy this company or when they invested in this company, if the demand goes down, when it recovers, will AirAsia get back to where they were before? So you have to answer that question only. If they are very confident that when everything flattens out in maybe hopefully 1 or 2 years, they will go back to the previous times, then just hold it. But if at that time they already put this into factor, and then something happened, like for example, Tony Fernandez was sorry, I mean just
yeah, it's okay.
just a possibility. Sorry, Tony. It's just that if maybe he was like convicted of crime or maybe there's a big fraud. Should you sell at that time? They must have, the investor must have all these possibilities in their mind, because if they say it's a fraud and then there's no possibility that AirAsia will bounce back, then just sell it off. Just get out of the way. Right. No point holding anymore. even if you are going to lose 90%, you have to sell it off, because fraud is fraud, or maybe corruption or whatever. I mean, if it's not in your original thesis, you have to cut it out. There's no point hoping anymore.
True. Totally agree what you just said. Yep. And yeah, you mentioned about that. So one of my friend who's also happened to be a beginner investor as well. So he invested in the hospitality rate in Malaysia lah, one of the local hospitality rate lah. And when COVID struck, I think the rate lost about 50% of its value. And to the panic of him, he sold it off. And right when June, 3 months after the COVID started, the rates actually picked up already, and people actually had slight optimism that things are going to die down, which is quite true. The active cases are about 10, 5 daily. Then they started to rebound. That's when I see long-term holding for a good fundamental company. As long as their things are still intact, it's okay to get hit.
Yeah.
But if you don't panic sell, then your value is going to crawl back.
Yeah. You have to see the resilience of the companies. I mean, nowadays, because after the pandemic, you can see the companies who are resilient.
True.
Even if demand drops, and when it bounces back, who's going to survive? There will be companies going bankrupt, definitely, but there are companies who will weather it through because they have maybe cash in hand, or they have a very easy way to raise funds, and it's normal. I mean, in a business cycle, there will be definitely downturns, there will be definitely boom times, and you can see this is a great acid test to see which industry going to thrive in this kind of pandemic times. And for my conclusion is that the tech companies are going to be big. As you can see in the recent earning report season, you can see all the tech companies are making money hand over feet. I mean,
Right. It's crazy,
how are you
people are
going to?
struggling,
Yeah,
they are the one thriving.
yes. You even actually consumers are not spending any much less. Actually, it's the services sector which are getting hit most lah. Services, but when everything dies down, I mean, if your services is still needed, I mean, you should still stay invested. It's only when it's being disrupted, you know, like for example, I don't know, let's say I don't have anything out of the top of my
The
head
taxi
now, but
industry, the taxi industry with Grab Taxi. I think
yeah, like for example,
that's the greatest
that was
example.
even before, yeah, that was even before the pandemic. So you can see this kind of sunset industries, you have to get out. I mean, if you don't see the growth, there's no point getting dividends also. I mean, like for
Yeah,
Shell, previously when I helped Shell help McDonald's. I mean, McDonald's was actually just a fun buy for me at that time. But we're talking about like Shell. I helped Shell before. I helped BP before, and at that time it was the dividends was the attractive thing for me. But and then I thought um, it's not my cup of tea. So and then because I was in renewables, so there's no point like diversifying, because at one hand I'm going for renewables, and at one hand, oh, I'm going for the oil. Is why? I mean, the
yeah.
negative will hit the positive, and then I don't get anything. It's just like same really. So
Don't contradict
so
yourself.
I'm just contradicting myself. So I just sold it off, and then look for new stuff.
Okay. So let's move on. So
Yeah, sure.
you talk about what's the value that you look at, how you
Yes.
make your investing decision. That's really interesting. So let's imagine lah, you are a beginner, just started maybe with a brokerage account. You have
Mhm.
you have no idea what to look at. Even my friend last week, she just texted me. She got a brokerage account. She downloaded the app. She said, "What the hell are these numbers talking about?" So they had literally no idea where to start looking. So what would your advice be for them to start at?
My advice is always the same. Educate yourself first. Always read. Read. Buy books and listen to what people say. But of course, don't take everyone's advice blindly. Everyone has a hidden agenda,
Right.
and especially ones which give you free advice. I mean, I'm not talking about us, but we are
Sorry.
not asking people. Yeah, we are not asking people to
Yeah, I'm
invest
not
in
telling
A,
for them.
invest in B. You know, we are not talking about that. I mean, you can say I'm talking full of crap now, but
Nah,
I'm
don't
just
say that.
I'm just honestly sharing. If you want, I mean, to the viewers, if you want to listen, you listen. I mean, but for me, it's just education. Sometimes people will say education is so expensive. You know, I tell them the price of ignorance is higher. You
Correct.
can
Correct.
yeah you can just follow blindly, but if you don't know what you are investing in, you also don't know when to get out. You don't know what are you going to do. So for my advice to your friend, learn, and always just learn. You read. There are a wealth of information out there. I mean, internet is free. You can ask, you can look into the numbers, and if you need help with the numbers, I mean, let your friend know. Ask you.
Mm.
Because I'm sure, yeah, I'm
Right.
sure you know, yeah, you can advise in an independent way. And as for me as well, I the same thing. I did not ask it the first time, but I just reading. I mean, I'm just comparing numbers. I'm very analytical. I mean, you as an engineer, you should know as well. We are very logical. So
Right.
we first look at the numbers, we compare. So after we compare, we get a sense of the numbers. You have to get a sense. You need to know, what does this number tell you. So for example, you were talking about like PE, EPS, all these
Mm.
numbers.
Yeah.
It might be just a number to some people, but
Yeah,
for
just
people who
ratio.
has a sense, yeah, for a sense of the numbers, you can see what it tells you. That's the more important thing.
Right. Right.
Yeah,
Mm.
and then learn from uh read about economics. I would say I also read a lot of economic books, because actually it helps people to understand how the world functions.
Mm.
Economics is not just money. It's like how human behaves, and the stock market by itself is how human behaves. Sometimes there's no reason why a stock can just go up like that. There's no reason. There's nothing
There's no
changed with
logic.
nothing changes with the business, nothing changes with how they are going to do stuff. But overnight it can just double, you can just, you see like the vaccine companies nowadays, I mean, you can
Pharma
see
stocks is crazy.
pharma stock, the glove stocks as well, the gloves, it has all, I mean, it's all human behavior. And if you can capitalize on them, and if you can understand why is this happening, then you have an advantage over the rest.
Totally, I totally stand by your point. And um, yeah, I always tell my friend, just open up yourself and ask people, look for advice. It doesn't matter whether the person is a certified professional or not, if their experience does it even make a sense. But always take people's word with a pinch of salt, lah. Be skeptical and always verify the sources. I mean, that's what engineers always do, right? We always verify the sources. We don't just give 100% trust. Take them with a pinch of salt. Do your own research. I think that would be so much helpful than you going through tons of new papers and websites and not having an idea of what you're actually looking at. So
go back to the source.
Go back to the source.
Go back to the source.
I love the annual reports.
Yes, go back, read the annual reports. Definitely. Although annual reports is a bit lagging, but you have to go back to the source. And for me personally, I don't read too much into analysts. Because you can see the analysts are actually chasing the stock price as well. If you see the Malaysian the glove stocks as well. I mean, if you are a good analyst, you would have seen this since the start of the pandemic. But you can see the analyst reports are now coming up with target prices after the fact that the prices went up. It's the same with Tesla, it's the same with Apple. 99% of the analysts are just putting numbers in a spreadsheet and then just telling you this in this and these numbers. So if you want to have an advantage, is that you need to understand, you need to look a bit forward. That's why I say look at trends. I always go with trends. The trend analysts are the one that you need to go, not the stock price analysts.
Right. Don't just look at stock picks. Listen to what people say, lah. Right.
Yes.
Those are really, really toxic, lah, for any investing mind. They will really corrupt your mindset, because it's normal for people to just go through that shortcut, what to buy, what price, buy it, just wait for it to bloom. But more often the time, it's the exact opposite that will happen, lah. Because those are, sorry to say, gurus, they are just syndicates that just ask people to pump, and then they just dump it. Then they profit from it, then the people are left struggling with it. So that's actually pretty sad.
Even with analysts as well, I mean, from the investment banks, they have I mean, a well-documented event is the Tesla, during when I think it was Morgan Stanley, the analyst, at one side he was saying it was overvalued. The target price should be like $80 or something like that, when it was like 300. And then at the other side, Morgan Stanley was buying Tesla. So how are you going to believe? The analyst is saying you should sell, but then the company itself is buying. So you have to make your own decisions. Take it with a pinch of salt. I mean, look at how they evaluate it, because sometimes they are not very transparent on how they evaluate. Most of them just use the discount cash flow method. It's just a very
the DCF method.
The DCF method is very, very outdated, especially if you are looking at those disruptive stocks, growth stocks. You cannot use that anymore.
Yeah, it's really hard to evaluate all those imaginary cash flow that it's okay. At one point, it's true. Also, you do need that speculative power to even evaluate that kind of numbers, lah. Even with glove stocks nowadays, I don't even know how they even evaluate that at P40, P50. That's really crazy.
actually, it's very easy. If you look at those analysts, you can see that they how they think is that they think in this way. This is linear. You look at all the maybe 90% of the analysts, when they look at something going up, they say, okay, it will go up in a straight line. It doesn't work that way. Because if sometimes things that can go up, sometimes it will go up exponentially. And then if something can just go down, it will also go down exponentially. It will not go down in a straight line. Nothing happens in a straight line in the real world. So analysts is always thinking linearly. So that's why you see like Tesla as well. They were saying, okay, you can see that they are making 60,000 per year. Next year they will make 80,000. Next year they will make 90,000. It's like all linear only, but you can see that they are growing at 50%, 50% every year. That's exponential growth. So not many people can think in that way, man. It's definitely that's an example. Like for example, I tell you, okay, today I give you 1 ringgit, tomorrow I give you 2 ringgit, the next day I give you 3 ringgit, the next day I give you 4 ringgit. After 10 days, how many you will get? You get 10 ringgit. Very easy. But if I tell you every day I double, after 10 years, how much money you're going to get? Yeah, it's in the thousands already. 10, I think it's like 11,000 or something. You can do the math. I cannot do it in my head. After 5 days, it's 32. After 6, it's 64. You know, it's different. It's a different way of thinking.
Correct. But maybe just for the benefit of doubt, I mean, we can understand that they are too doing their job. They don't want to stand out too much from what their peers, what their competitors are doing. Like, because if anything goes wrong with the analysis, they do get roasted quite a bit.
But they are being paid.
Yeah, with the reason why I
do
think
their job.
the recent target price is just really crazy. They are just riding the wave, I believe.
I mean, if you look at in the US, they have a website where they evaluate all the analysts, and you can see the majority of them are 50%. So if you are 50% right, I would just flip a coin and then I can make my decision. Why must I listen to your analysis? You are 50% right, you are 50% right. Only one, right? You are being paid. You know, I mean, these analysts are being paid. They are being paid good money.
True. Totally agree. Okay. So there's that. So okay, let's move on. So why not, Kelvin? You describe your worst and also best investment and how you made them. I think you have mentioned earlier that you have made some bad decisions and also great ones that like Tesla, Apple, Microsoft. So maybe just a quick run through in this particular portion of the video. What is the best and what is the worst lah? So why not begin with the worst one? And what was the process before and after lah?
Okay, so let's start with the worst. I started to try a bit derivatives. So I went into like options. I went into some leverage products. And I would say, if you don't know what you are doing, don't do it.
True.
Yes. I found out that I do not have the time and the effort to monitor, because derivatives can change without any reason as well. And it's not tied fundamentally to anything, because it's the name itself is derivative. I mean, it's just based on the price movement. So I mean, if you don't know what you are doing, don't touch it. If you know what you are doing, then of course it can be part of a portfolio strategy. I wouldn't touch it anymore. I feel that I'm comfortable enough with using what I have now to grow, and there's no point for me to turbocharge anything and take more risk anymore. So I'm not going to do that again. Also, I was into commodities before. Gold. I held on to gold, and then also I feel that it's not what I want as well. It's not. It does not create value. I think a lot of people do not understand that investment has to create value. If it's gold is just a holder of value. I mean, and it doesn't even hold value. It actually loses money. You know, so a lot of people don't understand that it actually loses money. Why? Because you dig it up, you need to pay money. You store it, you need to pay money. You know? It doesn't create value. So I also don't touch commodities much, and actually not anymore. So I have zero holdings in commodities.
So Kelvin, on a side question, just a quick one.
Yeah.
So people always say, if you are in for the investing mindset, then just go for the investing mindset fully. But if you really want to go into day trading, you have to put in a lot of efforts and tons of time, maybe even the full time, to do that kind of trading in order to be successful But then there will be times where people ask, why not is it possible or is it feasible if I do like 90% investing, but then just because my hands are itchy, my hearts are itchy, I do 10% of my portfolio trading? is that even advisable, or should people don't even try it?
I would say if the 10% can bring 90% of the returns, maybe you can do that. But if the 10% is going to bring less than 10% of your returns, then just go back into passive investing. I have found the effort is not worth it at all. I actually did roughly 10% before, and then I found that I'm losing sleep on that 10%,
Wow.
while 90% is making money without me doing anything. So why would I want to waste 10% of my life when I can't even outpace my 90% returns? So I just say, okay, I just maybe 10% I just put it in boring dividend stocks, or put in bonds even. I mean, it doesn't make me lose sleep, and that's the most important thing.
But it's human nature, right? We all lose the patience. We get impatient sometimes, because your stocks are, it's growing, but it's growing at a pace that it's kind of boring already. You're just investing. You're just no, people chase for the thrills. Sometimes
I
young people.
I tell people what you should do. If you are itchy hand, you go Genting. Yeah, you go Genting, you get aircon. You get aircon, you get free hotel stay. If you can afford to lose that money, and then the odds are even better. If
I
you
would
if you
advise
if
them.
you I wouldn't advise, yes, but it's actually basically the same. It's actually basically the same. If you go to derivatives, if you're gonna day trade, because you have no idea what it's going to do. If you have an idea of what is going to happen, yes, then go ahead, day trade. But if you have no idea what's going to happen, you are just going to like play around, go Genting. It's the same thing.
Yeah.
If you put black or red, you lose. If you the I think the odds, the house age on roulette is like 2% or something. That means if you bet 100 ringgit, you are expected to lose 2 ringgit. So you put that lah. You count how much enjoyment you can get it out. You go there and then you just play And then if you at the end of the day, even if you lose everything, let's say you put 10,000 or what, you lose everything, at least you get a free bus ride home or something. You get something out of it. You get a free dinner. I don't know. I don't go Genting. I go there just for the cool air. But I mean, I can understand why some people like the thrill of gambling. I also do think like derivatives and day trading is like some sort of gambling, because it's very short term. It's
Right.
very hard to predict what will happen. There's a very good analogy that I saw someone said. The economy and the stock market is like the stock market is like a dog. The economy is like the person walking the dog. So the dog can go anywhere it wants, short term. But at the long term, the guy is going to lead the dog. So I mean, if you are day trading, you are being the dog. You don't know where the dog is going to go. Yeah.
Well
But
said,
if
well said.
if you look at the long term, if you are investing, you are the person. You can lead it. You can control it in a certain percentage. I mean, you can feel that at least a sense of control on that investment. Because day trade is really a gamble. I mean, I did options on Tesla a bit last year, early this year as well. But it's just gamble. It's not for fun, because MCO got nothing to do, and then I'll just put a bit of money, and then some went well, some didn't go well, and then at the end also break even. So that's why I say, yeah, you break even, you get that money, you go Genting better.
Okay, for the viewers, just don't. I mean, I think the viewers get it lah. But I've been
not an
Genting.
endorsement of our
I've been to
only
Genting. I lost 200
casino.
the night. I thought it's better to just go and have fun, buy good food and eat, rather than just losing the few hundreds in a 1 or 2 hour span.
This disclosure, I own a bit of Genting shares.
Okay, we'll see about that. But if the fundamentals is right, doesn't matter which industry it is.
Yeah.
No.
I also have, and on the same topic of the worst investments, in terms of monetary loss, I have BMW and Daimler was my highest loss I made the most loss. At that time, before I really wanted to go into Tesla, I was thinking, because BMW had those battery cars, and Daimler was also like a very big, they have vehicles in every sector. So I was thinking, well, I'm in Germany, I can't go wrong. I mean, I've been in a BMW, I've been in a Mercedes. I know that they make good products, they make really, really well-loved products, their brands are very big. And I saw the trend of the EV at that time. So I was saying that, well, who's going to be the best? It's definitely the legacy automakers, because they have the factories up, they have the brand, they have the fan base. So I put a substantial amount of money in BMW and Daimler, but then it didn't go well. I made quite a big loss. I think in the six figures something ringgit, 6 figure.
Damn.
And yeah, and then, but yeah, well, you live and learn, no?
True.
So
Learn from your losses.
So yeah, then I know that now old companies, they move very slow. So now I know, then you also can learn. I mean, old companies really move very slow. You see, if you look in the news, everyone was saying that Tesla killer, Tesla killer, say, oh, people, Porsche Taycan or Tesla killer, BMW 3 Series electric or Tesla killer. Everyone Tesla killer here, there, Hyundai, what, Kona, everything. Their sales figure is nothing, and you can see they are way behind in the technology. No one, when now it's like synonymous. Tesla is like synonymous with electric vehicles already. You cannot fight that. It's like when you see movies, every phone is an iPhone, then you know that this company is going to take over the world. Although Tesla has not been in movies much yet, but soon electric vehicles will definitely show up as Tesla in the future.
It'll be the definition already.
Yeah, it's definitely like that already. So then at the time, I just cut my losses, bite my teeth. And then in 2018, with the money that I got, then I put a lot. I put even more into Tesla. And it was, the rest is history. It was one of my best investments so far.
That's the best, Tesla. Okay.
So far, I mean, I hope there will be more.
Battery day is coming.
Yeah.
Okay. Okay, let's move on. So, yeah, I think we come to almost the ending part of the video. So if you had one chance to go back in time, I know it's really imaginary, just a crazy question, but what is the one advice that you will tell yourself? That one advice compressed into, that you will tell yourself so that you don't make all these stupid decisions.
I would tell my past self to open up more, talk to more people. When I started investing, it was basically just me. I did not reach out at all. It was all just books and internet. I would say talk. I'm actually I'm a very introverted person, but along the years I started to open up a bit more. If you can know people from other walks of life, you can learn a lot. I've started to meet like business people, and then the business people introduced me to other business people. And then also like when I talk to influential people, I mean, in terms of like maybe life coaches, all those things, they will open up opportunities so that you can meet other influential people and stuff like that. If you just keep it to yourself, you will not meet this kind of people.
Right.
I have a very fun story though. In 2000, I can't remember the exact year, but one time I was at the airport. I was lining up to check in to come back to Malaysia, and then there was this like unassuming man behind me, and they were talking about they were at a fair in Germany, so it was an industrial fair. So they were talking about their business. I mean, like machines and everything. And then they were like in a hurry. So I said, okay, you go check in front of me too, because business people. So they say, okay, thank you, and they go. And after that, found out we were on the same flight, and the man was sitting beside me.
Oh.
And he's actually a CEO, and in economy class,
Wow.
He was CEO of a listed company in Malaysia. Yeah. His company was very niche in terms of they have a very niche product, and it's in Malaysia. So he was actually like talking about his company and his hardships, and I learned a lot. I mean, you can, once you open up, you talk to people, there are a lot of people who are willing to share you their life stories on a plane ride. So really go out and maybe just say hi. Who knows?
Spot on, spot on. I always tell people, learning from your own experience is always painful and expensive. But if you can learn from people's experience, it's so cheap, it's even free. Then you gain much value out of them. That's that's basically their life compressed into values for you.
If your viewer want to piece 2 and 2 together, maybe I can give a hint. This company, when I met them, I think about 10 years ago, the stock price in Malaysia, they were on the ACE board, I think. It was 20 cents per share. Now I think it's like 2 ringgit something, or 3 ringgit or something like that. So they were very niche. Yeah, they were very niche, but they capture a very big market share in the technology sector.
Are we talking about
and Franken? They are, sorry?
Are we talking about Franken? No, right?
No.
That's very close already. Because Franken was 20, 30 cents a few years ago, and it's like 3 ringgit 60 now.
Yeah. Not that one. They are in the microchip sector. You can see that actually Malaysia has a lot of great companies. And this company actually captured the essence of a German company. That's why I think that's why they were in Germany. They were looking at the technology. So it's great for them. It worked out for them. Share price wise, their business wise has actually grown as well. So well done to the CEO and the team. But I did not invest at the time. And the CEO actually invited me after that to tour their offices. So I was like, wow, I was like really taken aback. I mean, we just met on the plane, and then he came with his Mercedes, and he drove me to the office. We had a short chat now, but that's all. I mean, no hidden agenda, nothing. So he was a very down to earth person. I mean, if I had money at the time, I would have invested. And it was nothing. He was not pitching anything. He was not recruiting. He's willing to spend an hour of his time to come pick me up from my house to his office, meet his team, talk a bit about what he's doing, and that's all.
Crazy how small things in life can really change the course of life. Yeah. So I think we have come to the end of the call. It's really informative. So what are your final thoughts? Maybe just words of wisdom, just the final piece of advice.
That's why I have to say all this. Learn. Don't be afraid to ask. It may be scary. It's definitely scary, because if you because you are putting your hard-earned money into a company, you are putting your money into something, hoping that it will be more, but sometimes you can see it becomes less. So it's a totally different mindset that an investor must have. But don't let the day-to-day prices affect the emotion part of it. I know it's hard to overcome that. I mean, beginner investor definitely will check their prices every day on, because it's not easy to just buy and forget.
I do that as well, but I found that it's really consuming. It really just consumes you from the inside, and then I just stop looking at it.
Yeah, usually for me, I just look at the opening price. Sometimes 9:30 US, just open, look, oh, okay, he's doing this, okay, nothing big happening, just sleep. No point looking at the numbers, you know. Well, I have news alerts. That's pretty important. But if it's not a big fundamental problem to the company, I mean, macroeconomic factors will definitely come into play sometimes. When you see that COVID, when the March 18 or something happened, then you can see everything coming down. But then you need to sit back and evaluate lah. Can you pass 6 months? Can you survive 6 months without this money? If you can, then if nothing is changing with what the company is making business with, then just enjoy your MCO at the time. So that's what I basically did. And then it's so heartbreaking to see your portfolio go down 30-40%. I mean, at that time my net worth also went down a lot, but I still can put food on my table. I still have a bit of income. I mean, even if the money is up, I don't sell, it's still not my money.
True.
Okay, yeah, that's what I tell a lot of people as well. You can see like now people will say that, oh, I have that 200. I'm very open with this. I have 250 shares in Tesla. You can see it's already like almost 2 million ringgit. But if I don't sell, it's not my money. I cannot spend it.
True. So, okay, I think that's pretty much it for this video. Kelvin, thank you very much. This 1 hour of call, I think I've learned so much from you. I hope the audience can make sense of all the information as well. And it could be a very long video. It could be a 40 or 50 minutes video, but I hope the audience really just took away some value out of this. So, Kelvin, once again, thank you so much. Thank you. And that's all. Thank you very much.
Thank you as well for inviting and to share. And I hope our advice, not only mine, I mean our advice can help
okay.
every investor out there. Well, it's a journey. I mean, don't take it as something that you buy and then hopefully tomorrow you can make money. There's no such thing. If everyone can do it, then no one is going to be poor. So take it as investing in a business. Take it as investing as being a small part of a business that creates value. And that's what I emphasize a lot. It must create value. If the company does not create value, there's no point investing. Even if the company in short term is sometimes it's like, making losses. Tesla is making losses for years. There are a lot of companies that are making losses. But you have to look deeper. You have to look deeper. Don't just look at the short term losses. You have to see how are they managing the losses. Are they making losses because they are investing? Because if you are building factories, you're definitely going to have a negative cash flow. You're gonna take up debt. You have to have losses. I mean, everyone in the business community knows that the first few years of business, even sometimes 10 years of business, you are not going to make money. That's definitely. But you have to create value. You have to create products. You have to create services that the consumer wants, that consumers are willing to pay. And if you can identify those companies that are going to produce this kind of value, then it's an investment worth looking into. And then once you see that it's worth looking into, then you can start to think, is it worth investing into?
Okay, that's pretty much it. Couldn't catch it any better than that already. Okay, that's all. Thank you very much.
Okay, thank you very much.
Thank you very much for your time, and I will see the audience next time. Thank you.
Okay, thank you.
Hey Kelvin, once again, thank you so much for sparing your time for this conversation. I've learned a lot from this conversation, so I hope the audience can also walk away with a lot of values. So to all my lovely viewers, if you did not manage to watch the entire video, fret not, because in this part of the video, I will be summarizing the 5 key takeaways from this conversation. Lesson number 1, start your journey by investing into knowledge. Buy books, watch videos, read and read and read. If you think that knowledge is expensive, then think again, because the price of ignorance is even higher. Lesson number 2, don't be afraid to ask. Just ask. People are more than willing to teach and also advise you. So just take their words with a pinch of salt and do your own homework and research, and that will help you to go the long way. Lesson number 3, invest into companies that brings or creates value. All of those PE ratio, EPS, dividend yield, all of those are just financial ratios, and they are usually lagging indicators and does not think forward. It is more important to put your money into companies that will actually create products that people will pay money for, and those are usually the companies that will thrive in the long run. Lesson number 4, look out for the general trends. This is closely related to point number 3, but I have to mention this. It is more important to understand the general trend moving forward as opposed to what people had liked in the past. Remember, people will move with trends, so legacy companies that does not innovate will eventually get replaced. Lesson number 5, as simple as it sounds, know what you are doing. Don't just buy stocks because people recommend you that this stock is very good or it is the right moment to buy. Remember, people can only recommend you what to buy, but when it comes to selling, you are on your own. So always know what you are doing before you invest your hard-earned money. And yeah, that is all for this video. Thank you very much, and let me know in the comments down below if you love this kind of content. And you can help me by smashing the like and subscribe button down below, and it goes a long way with the YouTube algorithm. Thank you very much again, and as usual, I will see you in the next one.